Hello everyone and welcome to today's No FOMO Charts live stream. It is September 6, 2022 Monday. It's about 6:30 p.m. Eastern Standard Time, so I'm streaming much earlier today. The stock market was closed yesterday for Labor Day holiday weekend, and the Monday was off yesterday, but now we're back. So the stock market and crypto market has continued to pull back for over 7 days. Hello, welcome everyone on TradingView, YouTube, and Twitch. I'm gonna go over some stocks and crypto. So this week, what are we looking out for? All right. So the reason why we crashed, just technically, is the head and shoulders pattern. Here, left shoulder. Is this the new pen tool? Left shoulder, head, and then the right shoulder. Okay, so then what was the measured move? Approximately 5%. Did we hit the measured move down, the bearish target? Yes, we did. So remember, we talked about that last time as one potential scenario. 5%. If it goes down 10%, double the target would be 370. So right now we're just about 390. So what I'm looking at is the potential for the market to do one of two things. Okay, if we look at the bearish setup, we already had the potential retest of the trend line resistance and we rejected down from it. We Fibonacci from our 2020 low to our August high. We're just above the 618. We attempted the 50% retrace bounce. Let me zoom in for this a little bit. So the market is in a daily downtrend and I'm still looking for when will it bottom out and when will we bounce, because most assets in stocks and crypto will probably bounce as well. So 70% of stocks have been pulling back down, bearish, selling off for about a week. So that's the potential bullish setup that I'm looking for. However, we could keep selling off. It's definitely possible we might get a quick 1 or 2 day bounce, just like we did early in the late August, earlier in this downtrend. Low, high, low. We attempted to make a high, lower high, hit lower lows. But right here, the 618, okay, this is kind of our hidden line in the sand right now. There's another pivot point right here at support level 382. So let's just mark that for next time. Just watch out for that. All right, excuse me. So you just want to watch out for that 382. We're right here, 389, 382, the 786, 377 as well. Hello, welcome. So just something to watch out for, okay? Because we did lose these pivot points. And if we look a long time ago, there are gap fills, many gap fills from the June crash as well. Okay, 378 as well. We extend that out. The gap supports are very, very real. So we're bearish gap fill. All right. One thing I do want to point out though, if I zoom way out as an investor, this is one potential setup that I was looking at, is we could potentially, if we hold above 387, 380, and if we have good bullish catalyst that, for whatever reason, probably going to come from the government, right? If very small chance, but it's still possible, we could make a inverse head and shoulders, which could be potentially bullish. But at the same time, right, we have interest rates, inflation, Russia-Ukraine war is still going on. There's still a COVID infection that exists. Weather problems all around the world, supply chain slow down, shipping issues, etc. So if it doesn't go break bullish, if we don't hold support, we have to hold this level very, very strongly in the market as an investor. It could take months, right? For this thing to, if it bottoms out here, That would be nice. And then bounce up. We have a chance because that would be a very, very strong pattern if that happens. If not, then we could see a little bounce here attempt and then it could fail, right? So it could actually do both. It could fake us out, bull fake, and then crash back down one more time because of inflation, interest rates. So that's mainly government. It's like a government catalyst, government institution, corporate catalyst. Okay, so just want to watch out for that. All right, for our swing traders, try to move a little bit faster here. Our swing traders, what are we looking at? On a 4 hour, we still have these trend line resistance on the top, trend line resistance. So we did potentially double bottom in the price on the 4 hour in the short term. That's why MACD momentum starting to build, starting to get a little green bullish, a little double bottom on this price right above 390. So that's why getting a little suspicious on these charts to see that we did start to get the daily death cross. 4 hour death cross. But at the same time, is if that price holds down there, we could see a little bit of a bullish bounce. Okay, but it's not super oversold on any of these time frames. I'm saying it's beginning to form. Even on the daily, it's not ready to go yet. This thing needs to be very, very much more strong. Okay, and how do we know this? Is we look back in history, even just recent history, May to June. How big was the MACD? Large, very large. Took 1 month, so it could take a 1 month for us to actually reverse it to the upside, right? Just in general, apples to apples comparison. Okay, let's look at the Dow Jones. I'm not going to go as in depth because it's very similar, but as an investor, we're watching out for this potential upside down head and shoulders, which is bullish if we can hold the level above 310. If that would be bullish, there could be 10%, right? That's incredible. That would be incredible. The news would be going berserk if we have that. That would take us back into a bull market. So that's an extreme bull case setup. The daily, same thing. We lost the trend line support, just been selling off. And some people might be wondering, like, why? Why was it so bad? In my opinion, it was a long squeeze. You know, in the Reddit community, you hear a lot about short squeeze, which means the price would eventually go up. Long squeeze is the opposite. There's too many longs up here. We had a bearish catalyst, and this is everybody getting stopped out, kicked out of their positions. Billion dollar funds know that. Play the head and shoulders, stop everybody out, and they profit. The big hedge funds, institutions. So for me, I sold off. If you're in my Discord, I sold off my Netflix somewhere in August, and then I was done with the long setup. Right? Just played it here to somewhere in the zone. Doesn't have to be perfect. Went long, entry, closed it up here. That's swing trading in this environment. So if we continue the bearish setup, you could see the support levels right here, 307, 303. Not quite super oversold there. It happens to be support levels as well. We are getting in the intraday, the 4 hour, the swing trading time frames. It's not quite a double bottom as SPY, S&P 500, but there is a little bit of signs that we could get this building of this reversal here. It's going to take some time. It needs to bottom out a little bit more, but it looks ready to go in terms of the setup existing. The setup exists. This needs to, wherever this price is, 312, if it's going to go all the way down to 310 or whatever, because the bots and algorithms are programmed to short. Okay, so just wait for that setup to finish. Somebody wants to take an entry, by all means, feel free. QQQ, NASDAQ. All right, we have a lot of people asking for N100 and such. Let's check out the NASDAQ. Same deal. As an investor, if we're getting this upside down head and shoulders, beautiful. I would like to see it hold above 288 and not go down. Potential, that's the bullish case scenario for tech stocks as well. A lot of people would love that for tech stocks. That's 13%. Huge target to the upside, 350. But if it's bearish continuation, the opposite is also true. This was a Very clean, pure head and shoulders. 6.72% to be exact, 6.6%, basically 6%. We hit that target, 6.62 today on the dot, right? So TA works if we get the analysis correct, right? Same thing, we lost trend line support, we lost it. We lost the triangle as well, okay? So, same deal. Apply it right in the 618 zone. It may or may not bounce, but somebody bought some of this low at the low of today. And if you're looking at 15-minute chart, 5-minute, it did kind of flag at the end of the day. Went flat at the end of the day. Very interesting. 293 and 283 as well. So looking for my swing trading entry soon. The bullish momentum is building. There is this trend line on the top side we do want to watch out for, but that's obviously the target. So tech stocks, a little bit of bottoming out. We have the Apple iPhone release event. It's tomorrow. The announcement at least, right? So we'll look at Apple iPhone 14. Let's see if it can save the market or save Apple. It might not save the market, but it might save Apple stock. Okay, so just watch out for that double bottom. If it's a double bottom W, that'd be beautiful. Kind of hard to see here, but 3% from this breakout. So QQQ could definitely revive itself, right? If this panic sell-off stops, which it might have stopped today, maybe, right? You have double MACD bullish momentum on the histogram, the RSI almost creating. The RSI itself double bottomed, and the price is double bottoming as well. We do have the 4-hour death cross, so this is a very short-term setup. This is not forever setup, right? Very interesting. Okay, also, if you're in my Discord, I did add a few different type of, for example, on the watch list. If I could bring it up here. On the watch list was different this time is I identified a couple support zone stocks that maybe, okay, high emphasis on maybe, potential. Why? Because big picture, we're still in this inflation interest rate problem global scenario. But in the short term, if something's at support and it's cheap enough, people might start buying some just to put it in the investment portfolio. So the potential setup for bull support zones, Google, Moderna's, I would say yellow light because they have a lawsuit against Pfizer, but I just put it in there anyways. CarMax, US oil, gold ETF, and Bitcoin potentially. Bitcoin is a little more volatile, but Google is looking very suspicious. A lot of stocks might have a bounce this month in terms of green. So patient longs, that's, we're just waiting for that. Or put on trade and wait for it. But this is what I'm saying. Moving to USO, right? This is the support zone that I'm talking about is $70. Okay. This is how many times? 1, 2, 3, 4 times that we hit the $70 zone. It could break bear and crash on us, right? Because if we zoom out on the weekly uptrend channel, it's fighting at that exact circle zone right here. It's fighting right here on the exact circle zone, right? But you want to be careful though. Even though I just said it's potential bull setup at the support zone, if we lose it, it's very bad. Why? Because we have a head and shoulders bearish set, very, very strong. Could happen. So you could physically see on the charts, there's a battle in mentality between the bulls and the bears. The bulls are saying, let's double bottom. You could see it. Double bottom, right? Potentially to go up again. But then the bears are saying, wait, what about this head and shoulders on the top here? So if it's really bearish, 25% to the downside would be catastrophic for the price. But that takes down to 53.42. So I'm giving two scenarios. We just have to watch whichever way the price breaks to see what's going on here. The daily, that's what I'm saying. A little bit of a battle here. It could be a very short-term bounce. The 4-hour is building on this MACD histogram. We're still in the 4-hour daily death cross, but don't mind that alert. That's an old alert. I have to erase it. We're still in this type of channel though, right? So I'm just saying, what's the volatility from bottom to top of the blue channel, the wedge? It's 8%. That's a pretty decent swing trade, right? It's just understand the risk potentially. USO is a very accessible ETF. Doesn't really respond to charts perfectly, but you know, at a bare minimum, 3% stop loss, 6%, or 8% if someone's trying to get the very top of it, 4%, and it's maybe, right? It's maybe because it's so obvious in terms of it being at the bottom. So just an educational example there. And the hourly is starting to flag as well. All right, so that's just something, just visually, now we see the bull setup green and potential bear setup. There's more, but you know, it's so tied to Europe, Russia, Ukraine war that it's not all about this chart. Okay, if we switch over to UNG, I do want to point out that last time we identified multiple streams ago that we're at the resistance point on natural gas ETF. So you could see here in terms of the resistance, we drew it in yellow, or I drew it in yellow. Double topped on the RSI, losing momentum here on the MACD, and then very, very strong pullback. That's 10%. That's a lot. That's a lot. Plus a head and shoulders price pattern on the intraday right here, or a rounding top, right? So there's 3-4 signs saying this thing's about to come down. But just identifying it, I always like to think relative top or relative bottom, meaning relative high or relative low, relative high. This is relative low back here in July. Okay, so that's swing trading in a nutshell. I'm trying to identify these low to highs. That was 78%. 75%. It's like a crypto. Okay, so where are we now? Right above the 50%, 618. So not quite super oversold, not really, but it's getting close above this 50% retrace area. Potential balance maybe 3 to 6%. So again, a quick swing trade. Potential. But we did gap down, so watch out because the big support is all the way down here at $23. That's our big target down here in the circle. Yeah, so we'll leave that for next time. Okay, moving on. Let's go to gold futures. So one thing that I'm identifying on gold futures is it's in the support zone. Okay, it's not about the exact number. In the support zone in the blue here at the bottom. So we're looking at July and September support right now. And we could see that the triangle is in such like this, right? So again, trying to long gold up here might not have been the play, might not. So here we're at this potential support zone right above 1700. See if it can survive, right? See if gold can survive. The volatility range about 3%, so the stop loss just about 2%. So not the exact perfect risk to reward. Might have to pierce through that triangle, but pointing this out right now on the stream for anybody in the future, if this can hold, that would be very good. Potential bullish setup. Okay, this is under the assumption that the market doesn't keep crashing for 2 weeks straight. I'm talking about whenever we get the bounce, what stocks might go up. A lot of tech stocks might bounce as well. But in terms of very, very visible setups, these are some of them, right? For example, moving on to Google. Google, it did fall out of its channel, so just watch out for that. But in terms of the price support zone for Google, right, they have some events happening in October. But if we look at what was the lowest price of Google, somewhere around like almost $100. Right, the lowest low is 102 approximately. So as long as we can hold right here, this 102 to 105 range, all right, that's our large support. We're going to put that down there, right? Because what is this? If Google was a truly bad company, the price would have kept going down here, but it bounced. How many times? 1, 2, 3. This is the 4th time this is coming down here. So if we just draw these two boxes like this, right, and throw fear, set that aside, set the fear aside. Right? Or we could draw just a really, really large parallel channel. That also makes sense. I could probably extend this one to the top as well. That barely makes sense, but still valid. Okay, it's not quite at the bottom, but you could see if it's going to consolidate here, where would I like to buy it? At the bottom? Long. I'm talking about long setup like this. Where do I want to buy this thing? Somewhere down here, right? If you're an investor, sometimes consolidation sideways plays is not really that safe because at some point it's going to break bearish or at some point it's going to break bullish, right? It's just the trade. How many times did this happen? 1, 2, 3, 4. This is the 5th time. So it might be a little too obvious. That's why I'm approaching it with caution, but I'm visually understanding that this circle is a better entry zone. Somewhere, anywhere here is a better entry zone for swing trading than trying to long this green at the top, where a lot of people got stuck. Okay, so just pointing that out. That's just a quick one. Google, interesting, right? Very interesting. We have a couple earnings coming out this week, GameStop and NEO, just to name a few, and Fuel Cell. So we'll go to those in just a few minutes. Also want to point out Apple, we'll do Tesla as well. So Apple, the iPhone 14 release and announcement supposed to be tomorrow. It's the iPhone 14 kicks off tomorrow, Wednesday. So that would cause some volatility for Apple. But you can see we lost the trend line very, very steep. This was not safe. I call this kind of pattern, it's an up channel, but it's Jenga, meaning it's at some point this thing is, everyone's betting their, if you've ever been to, like, I don't like to use gambling references, but everybody's stacking their gambling chips. Everybody's stacking their orders, right? At a certain point, you get a bearish top, head and shoulders, and then you get out of there, right? I was calling the short, I said it was forming on my profile on this side, 163 side, right? Which happened to be our neckline breakout for the short that occurred. So sometimes my calls on shorts are a little early, but it's because it's forming and then we watch for it to form and then short it down. This was 6% as well. 6%, we already hit that target, so it's kind of fumbling down here. The neckline. It's actually 8% target, so okay. All right, we did almost hit that 8% target. If it's double the target, 16%, it's very, very deep retrace if that happens. Fibonacci as well, approaching the 50%. That's why Apple could bounce either here at 154 or 146 or 140. Any of those levels, right? So we could see we did find the resistance of 176. Mark this for next time, this resistance zone. Unfortunately, the market could not sustain itself. Interest rates, inflation is just too powerful. But just like the QQQ ETF, this particular bullish setup is building. MACD, histogram, open, RSI, giving some bullish momentum here. So the target, first target would be the top of this trend line. If it bounces, the potential 6%, 5%, so that 3% stop loss, and let it go. Right? You have your potential, I'm saying this educational, potential entry point, and then you have your potential exit target, profit target for swing trade short term, and then you have a potential stop loss if we have non-stop selling from the algorithms. Watch out for that. 1 hour not quite oversold. So again, one of these mornings at 9:30 New York Eastern Standard Time is it could pull back significantly, and then once that, let me draw it, the price could pull back significantly in the morning, just for 1 hour, 2 hours, hit that bottom, then all the swing traders will execute their longs. So it doesn't necessarily mean buy it exactly at this price. This is the general idea. Okay, so again, on the daily, the giant MACD Momentum's not ready to go yet. So if an investor, we're gonna have to wait for that. Last time, May and June, was much more visible. Is it like that copy paste? No. So investors should be a little bit more cautious. Tesla, let's check out Tesla. So just want to point out, I did call out this double top formation almost 1 month ago. And the bearish target was 10% to the downside. And we didn't quite hit that target. Close though, close. If we use the channel wedge target, 6% from the neckline breakout, and then we did hit that target. Okay, but the blue target was our first bearish setup. So now let's remove that. Remove that and get some Fibonacci up. Just to get some quick support. Resistance levels, mathematically calculated. Get a trend line with the close in there. Okay, and this triangle is obviously over, but I just like to draw it there. So you can see the support levels. We just try to hold the old pivot of 270.48, but there is a lower one here, 260. A bunch of news with Elon Musk and Tesla with all the batteries and the upgrades and stuff, etc. The new tech. But 260 support, 246 support as well. If we do break bullish, if the market's sympathetic and all stocks rise in the next 1, 2, 3 weeks, 287 resistance, 300 resistance to the top side. Not quite super oversold on any time frame for swing trading. We just look at the price. Starting to see a little bit of signs of potential double bottom these 2 days in a row, right? 266. 266 and then another day of 266. But this is what I'm talking about. If you're a day trader, you know sometimes when the market crashes in the morning, it bottoms out, then you buy it at the low of the day and then you hold it and you make money. It doesn't always happen like that, but that's one potential setup, right? No, I shouldn't say make money, but profit. You hit your profit target and you sell and you get out of there as a day trader. But sometimes you get the crash, right? So if anyone's trying to practice day trading or practice swing trading, like I said last time on the stream, if you have free accounts on any account, I believe on TradingView, you could open the trading panel, sign up for TradingView, open the TradingView panel, connect your paper trading, turn it on, and then you can trade, set up the your settings according to your broker and whatnot, and you could trade stocks and crypto in your country and your currency for practice. So if somebody's serious, that's how to do it for stocks and crypto. And then you don't risk any real money. So even professional firms that I know of their training program could be at least 2 to 4 weeks of paper trading only. So anybody starting out, it's very, very highly recommended to get this window open and then get the order window open. You practice your limit orders, your take profit orders on the top for green long entries and your stop loss on the bottom, and rinse repeat, and then sky's the limit for skills practice. Okay, we're going to be transitioning a little bit. Let's go to a couple of the earning movers. We have GameStop actually reporting earnings in 1 day. That's tomorrow in the PM, so post 1 p.m. or Pacific Standard Time or 4 p.m. Eastern Standard Time, basically after the stock market closes. But GameStop, one of the OG kings of the meme stock trading world. Let's start with the weekly, right? GameStop, after the monumental short squeeze from 2 years ago, it's been a long time now, 2 years, we've been stuck going sideways. I could draw this triangle. This sort of works as well. If I use this perspective, the giant flag, we just lost the support level. So that's a little bit concerning, right? There's a little bit of this support level right at $21. So this is very large, measured 152%. Okay, that might not happen. But if we go low to high Fibonacci, you could see it's struggling a little bit. Right, I'm going to put this resistance for next time. So essentially consolidating between a 50% range. So if GameStop has good earnings for whatever reason, you might see a little bit of a pop, okay? Because whenever this is 1, 2, third time it gets down below the trend line support level. So that would mean it's oversold on these shorter term time frames just from experience, right? The 4 hour, just like Apple. Okay, but this one, if it has good earnings, it just has to beat any negative 41 cent number and the revenue estimate, right? If they announce anything with more investments, merger and acquisition, or sales. Although I do know from reading other companies like Nvidia and AMD that the PC boom for the pandemic sales has gone way, way down in terms of demand. So it's possible that video game demand has also gone down as well because, pandemic life is starting to get a little bit back to normal, at least for the summer. People went back to school, people going back to work for the office, just what I'm observing from the internet. And some companies I've read that their video game sales have slowed down. And graphics cards sales have slowed down actually. That's why the prices have been going down. But as well, on the 4 hour side, we could see, excuse me one moment. Okay, so on the price side, we could see 9% to 10% volatility if we have anything good, but I would recommend to not play the actual earnings release. Maybe wait a day or two if you want to be safe and not get caught in the negative 10 or negative 25% crash if it's really, really bad. Hello, welcome from YouTube. Okay, we also have NEO. So EV stocks are all the rage these days. Very popular, led by Tesla. We did have that. I believe it was in the Inflation Reduction Act, the EV tax, and the manufacturing agenda was kind of announced and signed through that. So just some fundamental news about that. Basically favoring the US electric vehicle car makers and sales rather than global. So with NEO reporting earnings tomorrow, let's see what's going on here. But in terms of the Fibonacci support level, just holding above this 618 level in a short-term downtrend wedge. We can measure this move here, 16%. 16% would take us down to 76 Fibonacci. This is what I'm saying, the zone though. If we ever get down here to $10, $12 NEO, not the greatest company in my opinion, but people like these kinds of stocks and the future of electric vehicles and whatnot. So if they have good sales, good earnings, $19 to $20 is the target to the upside, or $14 target to the downside if it's bad. So just moving on, we'll do one more or two more stocks just to finish the list. CarMax. The only reason I'm putting CarMax is they have earnings. Oh, excuse me. That's earnings on 23 days from now. Got my list mixed up. But the only reason I'm bringing up CarMax is it's at a support zone. Okay, so this is not an earnings play. This is more of a support zone watch list for the future, right? That's the third time it's gotten down there, the lowest price of 2022. So if it's going to swing up, that's 20%. Okay, so for an investment, that's actually very, very good if this works out. But this could be the time that it fails, right? If the market keeps crashing. So if it's 20% to the upside potential, this is more of an investment play. Larger stop loss, position sizing, medium size, right? Watch out for that. Next one, Moderna. Okay, the only issue here with Moderna is Moderna sued Pfizer for patent infringement on the mRNA COVID vaccine. So that's not really, that from a back to business normal perspective, that's what one analyst was giving his viewpoint on is, well, that's how biotech firms operate in normal conditions. So it's just one more sign that maybe for the summer, COVID is going back to normal, more back to normal life. The only thing I'm watching here is this potential giant upside down head and shoulders. Again, this is bullish from the $500 crash all the way down to $116, that's 73% off discount from the high of last year. So it's 70% off right now. So we just have to hold the support. So presuming that, you know, we could keep selling off, but right here in terms of the 120, 118 range, by Fibonacci the entire life of, actually before I do that, this is very important why I always zoom out and look at the long term. This is just like US oil. What are we seeing here? The largest head and shoulders pattern possible in the weekly chart. That could be super mega bearish, right? But if you zoom in, what do we just find? The potential daily inverse head and shoulders, which is the opposite, is bullish. So now we see the battle between the bulls and the bears. So if we lose $120, this thing could crash down extreme, like a crypto. This thing could crash down half, negative 50% to negative 80%. Because if we don't, the logic is, this happens a lot. If COVID is truly over, it's going to end. If we don't need vaccines anymore, then the value of these companies and the vaccines goes down. It's already been priced in, but the head and shoulders setup, if it's going to be real, could be catastrophic. But if COVID spikes up this weekend, this is the second major time, actually almost the third major time, right, for the next winter, is if COVID cases spike up, because I look at the chart data myself. If it spikes up, it could be bad, right? In terms of the Omicron booster, it's just I'm comparing last year's COVID data surge, infection positive rate, with this year's in the next 6 months. It could be very interesting to see how that plays out in terms of the numbers. But this steep trend line, this is over. That's why it crashed down so much. Where did it crash down to? The 786 level, right? So the 0.88 is our bearish target, $70. Our bullish target, 194. Let me say that again. Our support target, 117 or $71 for investment. Our bull targets, 200 and 250 to the top side. All right, we'll see. 63% range. So Moderna is not over. The risk is the lawsuit. Okay, so watch out for that lawsuit. And then vaccine boosters as well. All right. There's one more earnings one I want to do. Fuel cell, because that's related to all these EV cars jumping around here. Earnings in a week. Fuel cell. So in the daily downtrend, all right, but sometimes when you get these wedges, the daily downtrend wedges, just like Bitcoin, you might get the pop to the upside, maybe. So looking at this, right, holding above where the 0.88 retrace zone. This is why it's on my list, right? Support zone, potential earnings. If that's true, could see the 30 to 50% range here. Very, very large range. If we hit the support to the downside, 250 could be our downside bearish target. It's very obvious, right? In terms of, you could see the bottom of the yellow line. That's where the bears have their eyes set, right there. 241. Bulls are saying, okay, if the earnings are good, we could break out, retest, and then try to test 640 or 650 somewhere up here. Okay, so that's just a few of the stocks that I'm looking at, and the indexes this week. Again, the market has been crashing and pulling back down because of the interest rate and inflation changes. The interest rate changes, I should say, and stocks have 70% of the stock market has sold off, bearish. Now, how does that affect crypto? There is a correlation with crypto. Very easy to see. All you have to do is look at total market cap chart, and there should be a compare tool. Let's use it. this might take a second to find, but it's in here somewhere. Somewhere in here. I forget what the name is. If I can't find it, I'll find it for next time. See the compare tool? There used to be a compare tool somewhere up here. Where did it go? It's my favorites. Well, it's not easily discoverable at this time. Forgot the name. Now I'm really curious. There is. So basically, I'll find it for next time. It's not called compare tool. I just call it that. But you can basically overlay multiple assets on top of each other, so you're not just looking at one chart. Like you could stack Bitcoin and Ethereum and Nasdaq and S&P on the same price chart, and just all four of them can stack on it. So, but I think it got moved somewhere. I can't find it anymore. I have to find it for next time. Oh, I see. There's a request. Okay. SQQQ. Before we go to crypto, okay. SQQQ. So you're talking about the ultra short. So I was actually looking at this before the market, before the stream, is SQQQ. Okay. So for people who don't understand this is the ultra short. Okay. So this is the exact opposite chart of the ETF of the market, right? So if this is going up, that means the real market is going down. Okay, so this is a different ETF, different asset. Short QQQ, SQQQ is not QQQ. It's not the same thing, just for clarity's sake. So you want to watch out for this. You might be thinking like, why? And you're like, why? Is it important? Because it's starting to lose a little bit of momentum. Right, we hit the bounce on the weekly, not quite exactly perfect. We didn't get quite. It's a doji right now. It's in progress right now, but on the 4-hour, it's starting to lose a little bit of RSI momentum. And again, it's not perfect, a one-to-one relationship. What I will say though is, in terms of the upside down head and shoulders, did we hit the target? It already hit the first target, okay, of the 18 to 20% range. So you want to watch out for that. Okay, it's still in the uptrend, so it's not completely, which means our market's in the downtrend, daily downtrend right now. So we have to, this needs to, if it's going to stop here, you want to be looking for some kind of resistance. If you're thinking about where should you exit, like sell or whatever for this SQQQ, it's not over until you see something like the folding over. So like a double top or head and shoulders, or this thing just stops all of a sudden and then starts going downtrend, then I'll just get out of there. And you know, having a trailing stop loss or a defined stop loss, if you went long here and you're trying to figure out like where should you sell it, just have a trailing stop loss or etc. But it's starting to lose momentum, so it's already starting to show cracks in the uptrend. Okay, compare this to QQQ itself, which is the exact opposite. QQQ is identifying it there is MACD bullish momentum forming on here with a potential price double bottom. Okay, so as long as this doesn't crash down, right, it actually might reverse soon, this month possibly. So just watch out for that. Okay. All right, let's just move on to crypto because it's 45 minutes already. So total market cap is the correlation here with NASDAQ is we pulled back. Same thing, basically pulled back. Now what we want to watch out for is the lows here. The low, 761 billion, 819 billion, 919 billion, 1 trillion resistance, 1.1 trillion resistance, 1.3 trillion resistance. At the top side, we could draw this little triangle. The support is there, right? Kind of going sideways for now. Bitcoin not really in finding a direction. And this could be a long-term investment kind of flag consolidation to the sideways, to the side. So our support zone kind of in the 890 billion right here. So it could sell off a little bit more if it doesn't double bottom exactly where we're looking at, 900. It could sell off a little bit more. You might see a little piercing candle just like back in June, and then it might bounce back up when the stock market bounces back up. So there's correlation between the two, crypto and stocks, tech stocks. So I watch that very closely. So again, if we can hold our higher high above 900 billion for investors, that'd be very good. Not quite oversold on our 4-hour time frame, although we did sell off quite a bit. So the 15-minute, 5-minute looking to get a little bit of this oversold dip bounce going on. But watch out for, if it doesn't really bounce, it can reject down one more time. That's what I'm saying. It's not extreme yet. The 1 hour, the 4-hour daily is not even there yet, right? So probably short term, you might see another volatile sell off on total. One more time. Let's go to Bitcoin itself. Move along here. Bitcoin with the dump. We just had that dump today. You know, when I woke up today, it was like 19, upper 19s, thousands, right? That's what I'm saying. The Bitcoin dump. Watch out for that. It was consolidating. This is what I'm saying. It's not quite ready to go yet in terms of a Super Bowl setup. Why was this one so much better back in June, July? It's because it stopped dropping down. That's what I'm watching for again. Okay, so in crypto, I learned from the hard way and from experience from studying is if it's falling knife setup, don't touch it. Don't touch it as an investor or swing trader. You want to see it stop and go sideways. Then you have a chance of it being a little bit safer. So this was actually almost like a sim triangle and then just broke to bull. So that somebody just shorted this and sold off or stop lossed it out. Someone panicked, sold out of that, or forced it down at the end of the market. It could be news-based algorithm as well. Did we hit the 4% target? We did, exactly. So somebody's measured that move and then executed. Next measure move down is 18,000, so watch out for that. Right at a pivot point as well. 1 hour, trying to hold this low RSI. Okay, but if someone's trying to play the 15-minute, if we're just only looking at price, which I like to do, is if this is going to stop dropping, I need to see like a double bottom and then play the long to the upside. Or maybe this unlikely, but like a large upside down hidden shoulders, maybe that's possible. Or just consolidation here, or higher low, and then try to kind of wiggle its way up in an uptrend. Okay, so that's the two setups I'm looking for at Bitcoin. But again, the volatile nature of Bitcoin is when it starts selling, because it's in a 4-hour downtrend. We're not uptrending anymore. Trying to catch the bottom of every move can sometimes be painful in terms of losses. So watch out for that. Go to Ethereum. There's some news about Ethereum recently. Ethereum also pulling back. And so we can see we have a little bit of this head and shoulders bearish neckline setup, just like stocks. So if it's really bad, it could go down negative 25 to 28%, basically to 1100 dollars. We bounce out to 50, retrace, hit the 382. Still not 100% clear. Is it upside down head and shoulders? What is this thing, right? So it needs to see a little bit more evidence. Okay, this algorithmic selling. We lost the support level, right? So will it hold above 1500 or not? Because these little rallies, sometimes these are fake. These are just fake little swing trading rallies. So where's the support? 1544, 1500, 1450. Resistance, if it breaks the upside, 1650, 1685. Might have to tack on a 5-minute for this because it's crypto. So 5-minute, we did sell off. Hopefully if this 5-minute turns to its upside down head and shoulder, stops going down, there could be a potential bull setup. Very short term, 2% target, 2%, 1616. Maybe, right? Because Asia session didn't even start yet. So this is we're looking at pre-market crypto basically before Asia and Europe and America gets back online tomorrow. So this is a maybe, right? It's not even that clean of a setup, but for minimum scalping, it'd be something like this. Not even super oversold yet on 5-minute. That's why I don't really believe this yet. Because if they're in the 4-hour, the 4 is nowhere near super oversold. There's plenty of room to potentially crash down on this. Watch out for that. Binance Coin, the correlations are so strong with Bitcoin. We lost that upward sloping wedge. And here again, on Binance Coin, we see the topping out. This kind of reminds me of this S&P 500 chart. Exactly. You have the head and shoulders screaming at people for danger, danger, danger. This rounding top, perfect Bart pattern type of structure reminded me of that. Negative 20% to downside. We just hit the break. So somebody was watching this, and then when we didn't break bull, the shorts attacked to the downside. So we could see significant pullback on crypto if the bulls just stand aside or if they get stopped out. So just watch out for that. We might see a bounce when the stock market bounces as well. So now you can see it's in the descending triangle. That's what somebody was playing, whoever it was, or the group of people. They're playing the descending triangle. The ascending triangle is kind of over now. So watch out for that. The bottom side targets are 259, 237, resistance 277, 297. It is forming. It's not quite oversold. The big MACD, whoever's looking at that. We have a little bit of this flash dump on the algos. Not quite super oversold yet, so we want to see what happens with the next couple sessions. How about this? I'll just go faster for crypto because I spent a little too much time on stocks. So I'll just look on the 4-hour and we'll just go down all of them. Okay, so you can see here that a couple weeks ago, when we were here at $30, there's 7% move. But a month ago, I warned people, watch out for this. If we lose that, I was saying it's so obvious, we lose that support, it usually crashes down like 20%, 25%. We hit that target today, basically in the past couple of weeks. So is it really oversold? No. So as a swing trader, I would back off on this, on Solana, because it needs to hold above 30. We lose 30, the day trader is going to short down. It's already in a little consolidation box. 5%, right? Okay, Cardano, none of these are super oversold in terms of the 4-hour. So somebody's just trying to play the oversold. Not ready yet. The only thing is Cardano near a support zone of 40 cents, but it's a long way down to get there, about negative 15% before it bottoms out potentially. So I'll be watching for that. Maybe in the future, if this holds right above 40 cents, there could be the 25% range, profit range with the 10% stop loss as a real swing trade. Definitely possible. Definitely possible. See that. So you can see a consolidation of sideways. Not really my favorite trade of all time, but you know, if somebody's going to try to risk it on support, that's normal business as usual. XRP, everything followed the same pattern. We had that very short-term uptrend and then topped out and then pulled back down as well. Okay, so you can kind of see the swing traders playing it because where is the low? Vertical line here, that's low, you know, RSI low again, low RSI crash, low RSI crash. This one, low RSI crash. That's why for me on crypto, you want to try to buy as low as possible on the crashes and go long there. Sometimes that happens in your time zone, sometimes it doesn't. So, you know, it's up to you to decide how to play it. But the supports 32 cents, 30 cents, 29 cents. Resistance 34, 36, and 38. It's always good to have that in mind so we're not surprised by anything. AVAX, we hit our second support level from a couple streams ago. So it's very interesting practice, right? In terms of it was uptrending and then at a certain point it ended. So one of my UK mentors, in terms of trend line, always taught me that the break of the trend line is very, very critical, very, very obvious that something is wrong, right? Because if you have this setup, the support that's holding for 3, 4, 5 times, and then also the resistance that's rejecting 3, 4, 5 times, and then one of those in the future fails, very, very obvious. We try to bounce, fail, and then straight to the 0.88 retrace. So this one's not super oversold. This thing likes to go down to like 15 RSI when it's at its relative low. It's not at its relative low. It could bounce up in like a 5-minute, you know, short-term day trade and whatnot, just like this. But I would like to see a little bit more. 1, 2, maybe like a deeper 3, then the bounce, right? Or it could just hold the support level right above 17 and then bounce up. So we'll just watch what happens. So let's see, DOT as well. All I'm going to call out here on DOT is this giant support zone down here. All of this is fair game to get pushed down into. There was that potential upside down head and shoulders that was on the picture, but that failed, right? So nothing wrong with that. Just move on. 13% range. It failed though. So now I'm looking at the support zone more in this zone. It's large, 10%. So DOT is not really it's not a safe crypto, so to speak. It's very volatile. So wherever it's going to stop in terms of either the lowest low or it's still holding its support level for investment. So, you know, somebody who just wants to wait for that could eventually go. Okay, Dogecoin. Dogecoin lost the trend line and it's currently in a daily down, 4-hour and daily downtrend still. Nothing extreme oversold except for the short-term day traders, right? Our daily, our 4-hour is not quite oversold. So for me, just patiently waiting for it to go a little bit lower. And then when it gets really, really oversold down here, that's when all the traders show back up. They show up in the market to buy the lows. The algorithms are ready. Because you can imagine there's hundreds of orders stacked down here by algorithm bots. So that's why I just play support and resistance and then just wait. If you have a TradingView account Pro or Premium, you could just set alerts. You right click, add alert, so you don't have to keep staring at the screen all day long. SHIB. So a good setup on SHIB for the future would be this kind of dump, right? Because we had the upside down head and shoulders, and that popped just for a day, like 50% or whatever it was, and then it stopped. So sometimes chart patterns just fail; they just stop. Psychologically, it was there. We hit the first target actually about 50, 60%. The first target, immediately sell off, get out of there. But in terms of the Fibonacci, holding above the 618, and now we just play all these levels on the way down. 1130, 950, 847, 700 support. Watch out for that. Okay, MATIC. MATIC's a little bit closer to the oversold range, but you want to see the crash dump. I'm talking about like this in the box. You want to see the crash dump. The crypto sell-off, the short's getting smashed in the market on the order books. And then I like to play these kinds of setups where it's super oversold. I come in and traders come in, you play a pattern and boom, you potential profit. That's a higher probability setup buy. That's 75%. That's incredible. Profits, right? Compared to just randomly buying one of these on the way down here. Doesn't make sense, right? Play a real setup, wait for the bull momentum, and then try to get that. That's why when I don't see anything on the chart, like I don't see anything in my setup according to my strategy or strategies, I just move on. Just pass. Don't do anything. With the money at least. Keep charting, but nothing's extremely oversold yet. Cosmo is actually in a weird spot. It's more on the resistance on this upside, right? So you can see it could just consolidate, crash all the way back down to 1022. Just wait for that. If it happens, near again, we got the fake out with this upside down head and shoulders not happening. So just watch out for this. There's a larger head and shoulders at play. Again, just like Moderna, you could see a larger bearish head and shoulders. And then on the small intraday, a bullish head and shoulders. So it's fighting right now. So how I play something like this, 450 between 375, just play the two breakout levels. It's going to break bull, okay, might play a breakout setup. If it's going to break bear, short that thing because it's not quite super oversold on this 4 hour. Sometimes it takes a lot of patience. Sometimes it takes 20 days or 30 days. Litecoin. So I sold my Litecoin back in August. I swing trade this from like June, July, and just sold in August, right? How do I know how to sell this thing? How do I know how to get out of here? Is when you hit a resistance zone and you get stuck up here, 65, which is our previous resistance to the left. You have the triangle, okay? It was almost ascending triangle breakout, almost. This would have been fabulous for crypto, almost. But what happened was stock market sell-off. So I knew that the inflation interest rate could cause additional volatility. And once this thing broke right somewhere right here, I just sold it all. My swing trade, I mean. But in terms of investment, can Litecoin go 500% again or whatever it was? Yes, that's why, I'm not giving up on crypto. It's just the relative momentum right now. Excuse me 1 second. Right, we're still in this downtrend on the daily, but it's going sideways right now, right? This is going downtrend sideways. That's good. So if we can hold the zone above 40, there's a chance that it can revive itself later. So I'm just talking about like quick swing trades, 3 days, couple days, 5 days, or a couple months. But I still have in my mind the big picture that wherever we're going to bottom in the stock market and crypto market, wherever that is, whatever the price is, hopefully as low as possible, then we all buy in, and then you hold there. All right, I'm just going to go rapid fire now, kind of running out of time. And then at the end, I kind of want to investigate to see if I could find that comparative really fast. So this not quite super oversold. I'm just looking at one indicator or two indicators, for example, just to go quick. here in terms of, is it relative low price? Not really on a swing trading time frame for a lot of these. The day trader, whoever the algorithm was, they had the best like 5 hours of their life right now in terms of trying to short this thing down. Right? But you can see when it starts downtrending, the bears and the algos really like to push things down. So watch out. HNT got destroyed, smashed. EOS holding. So when you see red in the crypto watch list like this, you know, what I learned is to not be too eager to jump in. Just because something goes down 5 or 10% crypto does not mean that's the bottom. Cryptos can go down negative 95% from the high. So EOS though, looking like it could be a short, additional piercing short setup. Watch out for that. Because it's just like Apple. We're stacking the chips, stacking the orders. At some point, there's a head and shoulders like there was here. And then you want to watch out for that on the downside. That's negative 36% to downside potential, which would be horrible. Take us down to sub-dollar. EOS, not good. Zcash, just watch out for this support level down here at $53. See if we hit that. And then the potential, is this bearish head and shoulders real or not long term? It's already underway because it's selling off in the red, right? IOTA under the trend line resistance now. So how far is it going to crash down? Could make a new low for this year. Maker, the last line is 662 in the sand for our support. If we lose that, expect more downside over time on Maker. Hello, welcome everyone. Thank you for watching. GRT, 9 cents. Okay, 9 cents, actually 8 cents, our final line in the sand. Hopefully we can hold this. Right, if it crashes down this much, then the RSI would be low. Then I might be interested if this thing starts wrapping around the upside potential. Silica selling off, but then still further support down on Silica at 30 cents. Again, you could get a intraday bounce, 5-15 minute in the Asia session, European. That's totally normal. I'm talking about longer term trading setups for like a month. Like how are we going to capture 60% for a week? Or how are we going to capture 38% in 30 days? I'm talking about that kind of setup. Not the quick turn and burn, 5-minute setup. I'm not talking about that. So this is an old alert. I'll leave this alert for my one Harmony because we did have the breakout when I set this alert back here in July, and then it subsequently rallied 50% plus. So you want to watch out for that. Yes, I'll look at DXY. I'm not going to do all these because you get the general idea of what I'm saying, right? Is there's a support level down here, whoever's watching this, and we're not quite there yet. It's not quite oversold, so we could definitely crash more. And then we want to see, just like stocks, we want to see the support hold. If it doesn't hold, we're going to see more downside. If it holds, then we're going to bounce up. There's the long setup for all these little cryptos. Approaching. So Chili's is, I would not recommend longing this right now because the potential head and shoulders. Want to be aware, 37% to the downside would be 12 cents. So watch out for that. ENJ. Once it's at the 1272, okay, that's pretty deep retrace, but 45 cents to 40 cents could be the support level here. Loop ring, 33 cents. Loop ring is at trendline support. But before I go through all these again, please keep in mind that if we rewind to total market cap, there's plenty of space here for the market to crash down a couple more times. Okay, so long story short, on whatever crypto or asset I'm looking at, I would like to see some signs of stopping of crash. Okay, meaning stopping of the price coming down, and it should stop at some point. And then there's a potential chance for a rally. Okay, DXY. DXY. So DXY, first off, is inversely correlated with Euro USD based upon my research, meaning that in general, if DXY, the US dollar currency goes up. In general, euro goes down. And that's true because euro has lost parity with the dollar, and now it's 98.93. All right, okay, so this is the exact opposite. Not 100%, but it's very, very close correlation. All right, so DXY, you just want to watch out for this in terms of where's the relative top? Where's the relative top, right? So you're getting, it's an uptrend, right? So you just never want to just call it the top of an uptrend. I want to see resistance formations because we've had these bearish momentum pullbacks as well, right? But at the same time, at some point this thing could fold over, and then the stock market, everything could get a little bit more volatile again, right? Because if this thing comes down, then the stock market should bounce to the upside. We're losing a little bit of momentum on the RSI. This is a day chart. Probably what I would do is draw the line like this, right? So if it's going to pull back, let's say on a 4 hour or whatever, the 4 hour is still, it's not extremely overbought. So it could rally a little bit more. That's why there's a little bit more potential for some more volatility and then pull back like this, like a pop up and then pull back down, or at least to the support level. Okay. So that happens multiple times when you have the setup. Here, it's not quite ready to go here. The MACD is ready, the RSI not ready yet. So just kind of watching for that. But you could see just a little bit more pop up, and it's stuck in the channel right now. So I just play it like that. So not quite at this second ready to pull back down or anything. But for the next 1 or 2 weeks, if this thing bounces, just watch out for potential pullback. Yes, so if we're looking at Euro USD, and again, I just want to pause here for a second. So thank you so much. I'm streaming live on TradingView, YouTube, and Twitch. We have a free Discord as well, but donations are always appreciated here on TradingView. Tier donations or PayPal donations to keep the ideas flowing and the streams going. Really appreciate it. All right, so this one we'll just look at a weekly as well. And the low of the euro, at least according to this chart, was 82 cents in US dollars, right? This is not in 1985, it went down to 57 cents. All right, so just watch out for that. All I'm saying is on this weekly chart is it's getting near the support zone as well. So in my opinion, this is one analyst's opinion, is that when DXY starts crashing, and if anything positive changes happens with Russia-Ukraine war and the European energy situation and inflation supply chain, then you might see the euro rebound there. In terms of long-term investment, in terms of day trading, you're going to get all sorts of little volatility pops, right? This is just news. This is algorithms. A lot of trading is algorithmic. Okay. So in terms of the big supports, though, I do enjoy the fact that people are already thinking about it. Like, what's the next level down? 97, 90. Here, let's Fibonacci from all-time 1972 price all the way to the top here. Right? It's just hovering above the 618. So it's hard to see, but the 618 is 92 cents. The big 82 cent support level, and then 75 cents. The lowest in this is 1985 though, or like 1971, it was like 50 cents. But that was a different time period. So I would say that, like, at least from the 2000s, like we're talking about, you know, modern times, so to speak, like the past 10 to 20 years. I mean, the lowest back then was like 85 cents. Just watch out for that. Okay, I do want to close off the stream just with a little bit of indicator investigation, because this is just a good example to do. Like, if you have a free or premium account, So if you have free, I think you can have like one indicator in your screen. It might take a while to test all the indicators, but that's what I do, right? I encourage you, if you have a pro account, I think you could put a couple indicators on there and just try all of them out, right? But since I have a premium account, I could do like 25 plus at a time. So um, sometimes I just like to stack it up, 3 and free, right? So then just, just kind of look at them. You don't have to do it like what I'm doing, but I'm trying to find that compare tool. So this is how I'll do it. But I encourage people in your own study, in your own free time, like on a Saturday or something, just pop it open and just add a whole bunch of the free technicals. And it's very easy to see which one like visually makes sense. Maybe correlation coefficient. This looks like chicken scratch, but I've used all of these. I've opened all of these, so like I basically know what they all do. It's not the chop zone. I thought it was up here. Let's see. Oh, right here, right here. So just want to finish that off. So if you ever want to investigate the free technicals, just add them, right? You can look on TradingView or Google or YouTube about which ones to start with, but at a certain point in your career, you're probably gonna have to look at all of them at least once. Especially these new ones. These are interesting. 4 years ago, 5 years ago, these new ones were not here. Volume, gaps, that was never there. Up, down, volume, visible average price. Let's take a look at these. Right, you might not see gaps on 24-hour volume. This is interesting because this is different than the regular volume. Right? If we look at 24-hour volume, it's a little bit more accurate. Let's just get some, right? You have a selling climax right here. That's something I'm seeing. So it does help a little bit. The selling climax right here, a little spike. Up down volume, that's a little confusing to me. Just visual. Average price. This might not work on a daily chart. The gaps, wonderful tool. I'm going to favorite the gaps tool right now. I love this thing. It's great. Favorite star that. Because sometimes you don't see the gaps, right? So I'm just going to make it yellow. Beautiful. In terms of 24-hour volume might be more useful on the intraday side. But these gaps, wonderful for finding support. Forex, there might not be gaps that much in crypto and Forex, but stocks, this is extremely important. Why? Because gaps, if you studied your candles and your chart patterns enough, you know that it's resistance or support levels hidden. So we just gap filled into this gap over here on the 395 side, right? Let's see what these other ones do. The 4-hour, this is good. Yeah. So this 24-hour volume, that's created for like crypto and Forex, etc. Well, there's more to Forex than that. So it is supply and demand, but it also, there's a huge government and corporation part to it. People don't realize that 80% of trading is algorithmic. So supply and demand can be quantified onto indicators or on social sentiment or the actual quantity as well. I'm sure there's dozens of research papers about that. The whole market is about supply and demand. Actually, the whole world runs on supply and demand. But 24-hour volume, it's interesting, right? It's better. It's a little bit more information than your traditional volume. So for some people on certain trading, this could help a little bit, but I'm just going to erase it for now. Average price. Now this is me just being interested in indicators right now. Open up the code, just take a quick look at it. Okay, just based upon the bars. This one, click on a Bitcoin. Yeah, but for me, yeah, average price, you can see it on the line. I'm pretty sure that's what this thing is doing. Line color to make it something obnoxious. There you go. So now you can see it. It's kind of just like average volume tool, but only about what you're visually seeing. So it might help. This thing might help. Because if you're looking at like all of 2022 or something, then it draws that line. So actually I like this indicator. It does help a little bit. Not perfect. Visible average price. That's different than the volume profile, but I like it because if we only look at 2022 data, okay, let me just get that on the chart and then hide everything. Then we know Bitcoin could, if we're talking about mean reversion, in the future, Bitcoin could revert back to 33,000, just the median price. So it's very important. Look at SPY. This is a very interesting case study. 2022, what's the average price of SPY? 418 average. Somewhere around there. So that's definitely, we already hit that on the first time, but if this upside down head and shoulders hits and stays, then definitely 7% to the upside. Okay, so last thing I want to show is they moved it. It used to be over here. That's not a problem though. Just had to find it. I remember it was the plus symbol. So here it is. It's right next, they moved it right next to you. So obvious. So it's right here. It's compare or add symbol. And you can compare or add symbol at least in a line format that's normalized right here. So the way I like to do this sometimes is case studies, open up like a stock or something like that, like an Apple stock, and compare it to the S&P 500, add NASDAQ, add Dow Jones, and see, you get your 5 lines up here, but you can't really zoom in because it's normalized by percentage. So all we need to know is S&P is in orange, NASDAQ in blue, Dow Jones in yellow. So it looks almost, so Apple's in white. It looks almost the same, right? In terms of when this thing tops out, when this thing crashes. So obviously Apple is highly, highly correlated. When this thing bottoms out, all 4 of these charts look almost the same. That's why I always look at Apple. When it tops out, you can see head and shoulders and pulls back down, right? Let's try like adding in Bitcoin. Hello from TradingView. So Bitcoin is, if you just look at 2000, so Bitcoin's in the white line. It is correlated with the stock market. You can see it visually. It's not one-to-one. But example, right here in June 2022, when we start rallying in the stock market, what exactly happens in Bitcoin? This thing bottomed out and we had a small little rally. And then when stocks pull back, crypto pulls back. Right? Even this right here in May, you had almost the same bottoming out pattern on stocks. We had the head and shoulders on crypto. There's a double top and then we crashed. We still crashed here in crypto as well, right? So it's a wonderful tool just to get a visual idea of what is going on right now with the market. So let's add, instead of here, because you're a Forex person on YouTube, you can compare and add like Euro USD. And we could add USD JPY and pound USD. Let's do those 3 now. See, these are different. Bitcoin, so USD JPY is the one in the blue, right? Euro USD and pound USD are basically the same, correlated. And this line is some kind of normalized line, the 0% line right here on the gray. But you can see almost like Bitcoin is inversely correlated with USD Japanese yen. Or actually, this should be JPY USD, right? Did I do it backwards? No. That is right. USD JPY. You could leave that there, right? So the inverse correlation, kind of the colors, you could change the colors too. But you could generally see that when, so, you know, Bitcoin is not 100% correlated with Forex. If you rewind, it's highly correlated with stocks. Okay, let's do one more case study. Sometimes this happens. When you get when you get the commodities like oil, let's get US oil, let's get natural gas, let's get gold, let's get silver up on here. Sometimes it's a fun case study to do on a Saturday, right, in your free time. So Bitcoin's in white, natural gas in the teal, oils in orange, and gold is yellow and silver. So gold and silver are obviously more like a Bitcoin style, a little bit more similar in the general sense. But the US oil and UNG, at least for right now, oil might be a little bit correlated, but natural gas, no way, right? So I take that off. Gold and silver are almost the same. They look very, very similar. But sometimes the correlations drop off with gold and silver with Bitcoin. And oil is just kind of finding support right now. So again, I love TradingView. Most people, you know, don't take the time to look at everything. This symbol is right here. It's like almost like TradingView wants us to do it, right? For fun. So I would highly encourage people, and I'll do Bitcoin. I see you on TradingView. I would recommend if you're starting out, if you have free time, just try out all the tools at least one time so you get a visual idea of what it does. And you'll find the ones that makes perfect sense in like 1 minute, 30 seconds, right? That's the indicators I like using. And then tools up here, you have the compare, add symbol, your time frames, your different ways of looking at the price, your indicators, your templates. You have your alerts. Bar replay is absolutely wonderful for reviewing price patterns and charts, your settings, your template, full screen mode. You can search, you publish your ideas. Everything's on the top now. The compare tool, I think, used to be on the way right over here. Used to be here. So again, we'll close out with Bitcoin. We're looking at it right now. So Bitcoin USD. All right, what's going on right now is we did have the little crypto flash crash today. And that's probably spurred by additional volatility spilling over from the stock market. But the one obvious, let me go to a brand new chart here. I'm looking at Kraken right now. So in terms of, we lost that trend line. We had this resistance on the top, right? And you're pulling back. It's downtrending. Okay, so watch out. What does this remind me of? It reminds me of this crash or this crash. Not quite exactly the same, right? But let's not be fooled with Bitcoin. If it's going to keep crashing, as an investor, I would just not do anything. Just wait for it to get extremely lowest price as much as possible. If you're a scalper, if you're trying to snipe a little bit of 1% or something like that, then there are opportunities in terms of 1 minute, 5 minute. Just wait for it to get really oversold and then play that bounce like it was here. There's momentum and then the market opened. This is right at the USA stock market close. Asia market just opened and we're going to European session 8 hours from now. So just watch out for 6 hours from now. So just watch out for that, right? On the 5 minute, there's a potential upside down head and shoulders pattern, about 2%. On a swing trading for Bitcoin, it did flash crash on the hourly, but you just play support and resistance, where support 18,699, resistance 19,000. So whichever way the price breaks between these two levels will be our guide. If you're a swing trader, you want to see a little bit more momentum price action. Like you actually want to see the price go sideways like that, and then either break bearish for you shorts or break bearish for the bulls, right? So break bearish for the shorts or break bull for the bears. Actually, that doesn't make sense. Break out for the bulls, right? Or break down for the bears. It's a tongue twister. But 5% volatility, this thing did not bounce up. We lost it, lost support. We hit the target, 5% channel, 5% to the downside, right? But in terms of, do I see large MACD momentum? No. As a swing trader, it doesn't exist yet, right? So watch out for that. That's why, for me, I play crypto much slower than other people, but my win percent chance is usually higher. So hopefully that makes sense, right? If you're an investor, if you're a holder, okay, on the day charts, we're still on the downtrend on the daily, right? We're still on the downtrend. It's very steep. Okay, so if it's going to crash, you could see the support level somewhere down here in the 16,000s, 15,000s, right? If it's going to go bullish, we need to establish the support level and hold that and then break bullish up back into that 33,000 mean reversion average fill price. It could take months though. It could take a year for that to happen, 6 months. So hopefully that makes sense to you who requested it, right? There's two supports on the downside, two resistances on the top side. If you're an investor, a deep investor, this thing is not uptrending at all on the investment charts on the weekly, right? So the only thing we can hope for is the double bottom above 18,000. But if not, we're not talking about 2018 rally anymore, right? It's starting to look like the crash of 2018, not the 2017 rally, right? Copy paste this as one example. We had the double top, copy paste it here. It could pull back 8% in the crypto market. It's happened before. So beware that long term, if the stock market keeps crashing, inflation, interest rate problem, it keeps crashing, right? And then when it finds a bottom, I will enter in again in terms of investment. This has not looked to me, it's not found a bottom yet. It's not uptrending or it's not finding a bottom. So, you know, more pain could be in store. How long could it take? 1.5 years from the top. So we're almost there. It's only been 1 year from the top, less than a year since the second relative top in November 2021, right? So keep going down. So hopefully I broke that down enough for investors, swing traders, day traders, scalpers, the short, medium, and long-term time frames, both bullish green and bearish red long setups. Potential setup for the future. All right, everyone. I think we went over a lot, especially that indicator review at the end there. But thank you so much, everybody, for watching here on TradingView, YouTube, and Twitch. Again, this is not financial advice, just an educational stream with some potential educational setups for the future. And I appreciate everyone for sticking around. Again, follows and cheer donations are always appreciated on TradingView to help keep the streams going and ideas flowing for next time. Hope you have a nice week. I'll see you next Sunday night, probably my time, PM time, USA. And hope you have good trading and investing for the rest of this week. Thank you. Bye-bye.